Lucy's presentations, I certainly think that hands down, we have made that case towards having a global perspective in investments. This said, it's almost like they have preached to the choir, we're heavy believers of that. But I guess we just have to do it again and again, because if I'm going to be looking at Lucy's slide there on the exposures of common Filipino investors for international markets, it's so very little. I would have been more forgiving, so to speak, if this were my time. I think a lot of you would understand I've been investing for decades now, just to be exact, 4 decades now. But I lived through that span of time when investing internationally would require a lot of commitment. It did require a lot of commitment. It made me go through the quagmire and the gauntlet before I got myself into international exposure. And why is that? Because at my time, during my time, you cannot invest internationally. You cannot have a global portfolio if you don't have $1 million. I kid you not. The minimum for a Swiss bank account or an international portfolio exposure is $1 million. Now, a lot of people would probably say, no, there were like small amounts and they're available. We only saw that when we started seeing online brokerage houses operate. Interactive Brokers, Charles Schwab, yes, they have lowered the minimums. But even as they did that, it wasn't that accessible. But you see, I started investing way, way before that time. And at that time, you have to open a bank account. You have to open a managed account of investments that would probably give you open access to all of these stocks and bonds. And that's why that was a heavy, heavy commitment. Now that Lucy says, it's 10,000 pesos. And to add, you can do so by putting in 1,000. And maybe on the dollar side with Voyager, you can do it for $500. That's less than 30,000 pesos. I still can't imagine why people aren't jumping on it. But I guess my job is to make sure that we get to understand, there are reasons for doing this. And I'd like to be able to add on to what Jake and to what Lucy have already mentioned. It's quite interesting because this data actually came from ATR Asset Management. Their macroeconomic views, which I totally 100% agree with, focuses on the local, getting into the regional, and getting into the global markets. And what are they saying? The thematics would be on the local side. Yes, we're opening up. We are getting into the market. Consumer spending is beginning to normalize. However, companies are still cautious in terms of expansion. Maybe this is not the way it is for other countries. But in the Philippines, that's reality. For regional, the emergent thematic regional factors are coming in. In fact, there is a recoupling. During the pandemic, we talked about decoupling. Like what's happening in China, what's happening in Europe, probably would have been detached to what's happening in the Philippines. But now, it's not like that. The slowdown, for example, in US markets gets us to a semiconductor industry that's going to be on a slowdown as well, because they're not selling enough computers in that economy. Obviously, as we produce the semiconductors for those same computers, then certainly our own manufacturers wouldn't have the export market for that. So now the world is beginning to be small again. During the pandemic, the world has actually become fragmented because people focused on domestic markets. Today, we're beginning the interaction once again, and the world will be becoming smaller. And we've seen that during pre-pandemic. But for the global side, specifically for the US, everyone's saying now that there is no risk for technical recession within the year. But if rates are going to be higher for longer, there is a possibility for 2024 to get down into that recession. But there is still a runway. The Fed is a shrinking runway, but there is still a runway to avert recession. And if they're able to pause on this brisk rate hike, and if they can begin cutting by the end of the year or early next year, then maybe averting the recession will be a reality. So what I've said would be highlighted in this very, very busy slide. See, it's going to tell you that the opportunity right now cuts across the world. It is not going to be just within the Philippines. But, I won't be a hypocrite to say that our outlook is good. However, as I tell a lot of people, different folks, different strokes. There are pockets of opportunities that we don't have here. For example, Jake and Lucy would have mentioned AI. Both of them mentioned AI. How can you bet on AI when you're in the Philippine market? So that is a very strong investment trend that we have to be taking a piece of. But how do you get involved with that when you basically don't even have technology companies in the Philippines? Very little. And it's going to be quite a proxy because the closest I can probably think of would be Globe. That's metamorphosizing into a tech company, rather than a telco with 0917 Ventures, GCash, and all of that stuff. But they have a big core, which is still telco. So if you really want to have a pure AI bet, you have to get out of the country. You have to get out of the region, in fact, and be there where the game is. So I guess it's very clear that we have opportunities to look beyond our borders. And why should we even do that? This is, again, a scenario where we get to compare the trajectory of certain sectors without COVID. If you're going to be looking at the blue line, if COVID didn't hit, that could have been the growth trajectory of that sector. So transportation, other services, hotel and restaurant accommodation. Obviously, there's a big drop in hotel and restaurants, right? But it has recovered. We can even say, it's already higher than 2019. But its trajectory has not hit pre-pandemic levels. We still would have a lost 2 to 3 years. But in other economies, it might not be the same. Let's get to push this even more. Look at real estate. Philippine real estate, if we're going to be looking at that sector, yes, there are prime prices of the most coveted properties. If you look at, the Makati villages like Dasma, Forbes, Bel Air, Magallanes, Urdaneta, the prices are sky high. But when we look at the real estate sector, we have to look at the entire breadth, which goes beyond luxury. You have to look at middle class and even socialized housing. If you get down to the bottom of the pyramid where the base really is, the real norm would be seeing real estate not even recovered from 2019 levels. But the trajectory is higher. I'm not saying it has gone lower. It is higher, but it has not yet coped up. Much the same way as finance, unlike professional business, education, and the other sectors. So if you are going to be making bets in these sectors, maybe for some of these sectors, the Philippines might not be the best bet unless you're really willing to put a stake in the fact that there would be quite a turnaround. So let's go back to the logic and the very theoretical foundation of this. It's called strategic investing. And we always harp on this as we help our RFFs really become responsible and accountable for their financial journeys. Strategic investing has to be goals-focused, continuous and consistent, and forged with discipline, responsibility, and accountability. The key is putting together your situation, the future you want for yourself and your family, and your investments. But let's highlight that. What your investments should be is a function of what you're doing with your portfolio. So here we say your investment should have to be efficient, of course, cost efficient. Next, diversify. How diversified are you? If I go back to Lercy's chart, looks like many of us are not. Many of us are so Philippine focused and would have been suffering from what we call concentration risk. And lastly, how are we performing against benchmarks? That's the worry that I have when people manage their own portfolios and do direct investing in stocks and bonds. We're not even doing so well for the Philippine market. How can you do this globally? How can you do this on an international scale? When I look at SLAMC, if you look at their assets under management, we're not even looking at SLAMC alone. For the money that's managed that would be third party. How about Sun Life's own money? Who's handling that? So it's a pool in a basket that's so big, it will be hard to beat them. Now, they have people like Jake. They have people much more in terms of number and equipped, educated to handle this. Why can't people entrust them with the money instead of dabbling on it on our own? So the first step is to say, I want to diversify. And if I do want to diversify, how do I get to do it? Effectively. Not just efficiently, but effectively. Asset allocation is key. It is a strategy that invests in different asset classes. As Lercy said, no asset class performs consistently. And that's the reason why you have to make bets in almost all of them. Time deposits, stocks, bonds, managed funds, real estate, insurance, and cash. We hated time deposits before. But today, time deposits are performing. If you go to the digital banks, if you go to the special savings accounts by commercial banks today, time deposits are returning very well for short-term assets. And why? They're giving you an incentive to think short-term because they know the long end is already going down. In fact, it is your job to look at this trend and to make a bet on long-term rather than short-term because you get the high rate for a longer period instead of being enamored with 30 to 90 days only to see that rate going down because inflation is going down. As Jake said, inflation is going down and interest rates will certainly follow. Matter of time. So you build a portfolio that balances risk and reward based on an investor's risk tolerance, time horizon, goals and objectives. Most importantly, goals and objectives. But not a lot of people are that diversified because asset allocation has to take into account concentration risk. And when you say concentration risk, are you concentrated on a given market? How much of your money is in the Philippines? How much is outside the country? Second, political and geopolitical risk. The tendency of our own political system, once there's a change in power, there's a change in admin, there's a complete change in policy. That is an issue for investors. It curtails investment confidence and it stops people from expanding because of the uncertainty. And lastly, it's the exposure to a weak currency. Whether we like it or not, the peso is still a weak currency compared to the US dollar and compared to the stronger currencies that are out there. Now, I tell a lot of people, when you say asset allocation, when you say diversification, you have to contend with two things. Number one is your time horizon. If you're getting older, and mind you, this is not a diss on people who would probably be of a higher age, we're supposed to dial down on risk. And when you're a lot younger, because your time horizon is longer, you can actually make bets on growth. But you have to balance both growth and defensive items or assets in your portfolio. There is what we call a time horizon issue because the risk profile depends on how much runway do you have. Availability of long tenors and credible issuers tell you that the longer you get, the riskier your position is. So duration management is also very important. It's not as simple. Even if you're investing locally or abroad, duration management is the purview of really equipped and experienced fund managers. So if you're going to be looking at time horizon, then it depends really on how much commitment you're going to have for the investment that you're having. And that commitment will always be based on the goals that you want to achieve. Based on the goals you want to achieve. But is it always a function of time horizon? Or is it also a function of your own appetite? You know, there are a lot of people here who will often say, I like to go for growth positions. And when the volatility happens, you can't sleep. The volatility happens, you get scared. And when you get scared, you take your money out. You realize losses. Supposedly, you have to come in and invest heavily when the bargains are out. But a lot of people actually divest when this happens because they haven't really identified and characterized themselves with their risk appetite. There is an equilibrium point. There is a range of how investments increase in levels of risk and the type of return they give a particular investor. So as you move up, the higher the risk, the higher the return. That's elementary. However, have you realized you're in the Philippines? So no matter how stable the investment you put your money into would be, that is still part on emerging Asian markets. Because we're in the Philippines. So basically, it's still high risk, even if you consider it low risk. If your world is the Philippines, your definition of risk will be Philippine-based assets or within our borders. If you look at a global perspective, your vision for risk and risk appetite will change. Because now you can compare an index stock, a blue chip in the Philippines versus a blue chip in Germany, for example, in the US, for example. So how blue is blue chip? No matter how blue chip you are, if you're in an emerging market, you're still in an emerging market, which means it's still high risk compared to another blue chip company in a given established and not so volatile market. So we will have to understand this, the fact that there are geographic limitations because of our investment concentration on the domestic market. There is concentration risk, there is currency risk, there is a question of the availability of investment instruments, and lastly, governance and compliance standards. How many, and this is, sorry to say this, even listed companies in the Philippines don't exactly rank very highly in terms of governance and compliance. One of our biggest companies, a basic staple within our index, is now hit with what? US suits, US cases for issues regarding information dissemination, issues regarding transparency. So the fact that you're in the Philippines, even if our governance standards are getting better, they're not yet at that level where you can consider them ultra safe. We are not at the same level of compliance as others. So we will have to deal with asset allocation in a very different sense when we have a global perspective. And not a lot of people understand. Your performance is actually going to be a function of your asset allocation. Many people put a lot of time and energy on timing, on security selection, only to realize they only conform and cover 7% of actual performance. Real performance is driven by asset allocation. The kind of diversification that you have over time is going to be driven by those actively or passively selected securities within a portfolio that does well versus benchmarks over time. So think about it. Diversification increases portfolio resilience in bull and bear markets. We've already seen this in our portfolio performance during the COVID pandemic. If you're totally concentrated in the Philippines, you're not going to be doing so well. However, there were markets that did very well during the pandemic. And quite frankly, you would have been exposed to other segments or sectors or industries that could have made you perform better. So I'd want all of you, mga ka-RFFs, to ask, how effective and extensive is your diversification? You know, I chanced upon a very good question, and that was asked by Dave Cruz, one of our, viewers in this event. He's part of the audience now, Dave. So Dave's question was, how did the Philippine index do compared to maybe the global index or the US index? That was his question. I don't remember it verbatim, but somehow that was the question. So I have the answer for you, Dave. And I'd want this to resonate amongst all of you. If there is anything you will remember from this presentation, it is this heat map. Because I'd really want you to view this and keep this insight to heart. This is the performance of different asset classes. And here there's everything. Philippine equity, Philippine fixed income, global equity, global fixed income, US equity, US fixed income, Asian equity, Asian fixed income, commodities also here. And we ranked them all through the years. From 2006 to 2014, 9 years. 9 years. Philippine equity was on the top 3 in 67% of those 9 years. 6 out of 9 years. Philippine equity did perform and perform very well. So if you're invested during that time, well and good. Unfortunately, many retail investors in the Philippines started investing in 2013, 2014. And just imagine, 2014, we were the number 1 performer across all asset classes, Philippine equity. And guess what happens after that? 8 years follow. And in the next 8 years, 50% of the time, Philippine equity was in the bottom 2 strungs of that particular ranking. 50% of the time, bottom 2. Kanina, 67% of the time, top 3. So, if you just invested in the Philippines, and you invested starting 2014, you will be challenged. Now, am I saying there would be no recovery? No. I am very confident our markets will recover. I'm very confident that we will do well. But suffice it to say, if you're diversified correctly, you won't suffer this same fate. And that's the reason why we'd really like to have partners like Slamsy, who would have all of these funds that gives access to our RFFs and, is able not just to give them products, but is also willing to educate them like what Jake and Lurcy has done today. As for me, that's the most valuable part. It's the education. Because we are in this thing for the long term. We're not here to make a quick buck. So think about it. What are must-haves in global investing? There has to be vast opportunities for growth and risk mitigation. There has to be multiple products, portfolio alternatives, options for asset classes, markets, and geographic exposure. There has to be a single source sales and service support platform. It's going to be very difficult if you access investments with one partner and then another partner and then a third partner. That's why we're here at Rampver Financials. You talk to us, we link you up with all of these international products of our partners. Notably and top performing would be Sun Life Asset Management's funds, Voyager and World Equity Index. Reasonable transaction cost. Reasonable starting base of investments. At alam nyo, dahil Rampver to, even if your money is in peso, like let's say, I want to invest, Rex, in World Voyager, pero wala akong dollars eh. So we're talking about $500. What? That's going to be less than 30,000. If you have 30,000 pesos, we service you. We do the dollar exchange. We will tell you the rate, which is going to be very, very competitive compared to your banks. And we will execute for you. We will make it happen for you. You have to have a reliable and dependable financial services partner and provider. Modesty aside, I'm expecting that to be us and Slamsy together as your partners. Because there are challenges in global investing. It is a must to invest globally, but there are challenges. Many people don't have access to markets and access to market information. Currency availability and volatility is also an issue. If you don't have dollars, what do? You want to invest in Voyager? What do you do? Will you be satisfied with World Equity Index? Fine. It's okay. There's nothing wrong with that. But if you want to have both, then Rampver can help you. But ito yung sinasabi ko, yung prohibitive capital requirements. I'll tell you, before I was able to invest abroad, I was already at a mature, ripe age. That kind of ages me, but this is true. It's because the minimums are really high during my time. Kung ngayon lang, ganyang kaliit, makakatatapos ko palang mag-college, maybe in the first 2 or 3 years of working, I might have an international exposure to securities. If I have this kind of access, if I have this kind of connection to a Sun Life Asset Management with products like this. Because transaction cost-wise, alam nyo ba, for Swiss bank accounts, you even have to pay custodian fees. You even have to pay transaction fees. In Sun Life's funds, I know, we all understand, we'll pay management fees. Fine. But there is no custodian fee. That is taken care of by the fund itself. So, clearly, we are in a situation of opportunity. As Jake mentions, it's a window. It is a window. And what should happen when we see windows of opportunity? We have to seize the day. And we have to be able to execute. If this is worthwhile for you and you want to move forward, please do get in touch with us. We have all of these platforms. You can reach out to Rampver Financials in any way. Facebook, Viber, YouTube. even our podcasts in Spotify, TikTok. Don't expect me to dance as well. Instagram. We will be in touch. In fact, we've already developed Rampver Online. And in Rampver Online, you can actually invest in Sun Life's World Equity Index Feeder Fund. You can open your own Rampver Online account now and then start investing using your phone. Start investing using your own mobile. And you can actually get into Wave through that. And it's very easy. You just like manage and open that account, select the mutual fund you want to invest in, indicate the amount and select the payment method, and transfer payment, uploading the confirmation of your investment. It's fairly simple. But no matter how simple it is, we all know some of you are concerned, some of you have questions, and that's the reason why we're here. We will handhold. We will not assume that everybody knows the technicalities of all of these things. We'd like to be there to partner with all of you and to move together towards a more accountable, progressive, and abundant financial future. At the end of the day, all of these will have to have a bottom line. And many of you know I actually end my presentation almost always with this slide. It's always anchoring everything on what truly matters. We'd like to be able to do well for our investments, but we'd like to be able to do that not for the sake of money, not for the sake of wealth, riches, and abundance, but for the sake of people who are special in our lives, the people who make us do what we do. That is key, and that is what Rampver Financials will all be about. Maraming salamat po